Guys, this is a real estate update video. If you haven't heard, or if you've been living under a rock, Jerome Powell for the Fed decided to cut rates last week, 0.5 basis point. This is the first rate cut since 2020. It's so big that my CEO, Robert Reffkin, decided to throw a party at headquarters last Wednesday when Jerome Powell announced this. We covered what interest rates were like back in 1981 and from after 1981 during every rate cut. So in this video, we're gonna go over the numbers today. Again, I'm gonna let you know what this means for you and give you my prediction of what's next in the market in New York City. So according to bankrate.com, which is a great source to monitor interest rates, the average interest rate for New York City after the cut is 5.95%. And there's predictions that the rates are gonna be cut up to 2% by 2026. So what this means for you is savings in your pocket, or you're gonna be able to afford a home that has a higher purchase price. For example, we're gonna drop the B-roll of our beautiful 2-bedroom, 2-bath. This apartment is $1.5 million with 20% down, which is a $300,000 down payment. You're gonna basically have a mortgage of $1.2 million. So last month, this apartment would have cost you $11,806 with a 6.625% interest rate. Now fast forward to today. If you locked in a rate today to buy this home, you just saved yourself $593. So your new monthly payment will be $11,213 per month, and that's a 5.95% interest rate. Here's the key though. You wanna work with a broker like me, or you should work with a broker like me, because I could refer you to mortgage brokers that I have relationships with, and sometimes they will even give you a better rate than what's advertised. So I've seen rates as low as 5.5% for this same apartment. Drop a comment below if you need a mortgage broker. I got you. All right, so here's my take on it. You probably heard that saying that every broker has said lower interest rate means more competition, which means higher purchase price. Yes, that might be somewhat true. However, lower interest rates is better for the market overall. Why I say this is, one, if you're a buyer, your monthly payment is gonna be a lot lower, which means you're gonna be able to afford more. It's gonna be easier for you to qualify because you're gonna need to make less money to qualify. For example, that same $1.5 million apartment is gonna require the bank to qualify you on lesser income. Rates go higher, means your monthly payment goes higher, means you're gonna need to make more for that same apartment to qualify for that apartment. So Robert Reffkin has mentioned this in previous CNBC interviews. Most people that have purchased in the past 10 years, they're locked into interest rates from about 3% to about 5%. So as a buyer, what this is probably gonna mean for you in New York City is that this lower interest rate is gonna lock more inventory, because sellers last year didn't wanna buy a new home at a 7% interest rate or 6.5% interest rate. They wanna buy a home at a much lower interest rate because they're probably locked into 3% mortgage rate. If you bought your home 10 years ago, you definitely refinanced in 2020 when rates were like 2.8%. This is gonna lock more inventory because it's gonna make it more affordable for that seller to go find their next home and start their next chapter. One, in New York City, my prediction, you're gonna see more inventory come to the market in the next year or two. And then two, yes, you might have more buyers entering the market because rents are just at all-time highs, but you're also gonna see lower monthly payments, which is just great for you as a buyer. Comment below if this all makes sense. Let me know if you need an introduction to a mortgage broker, and I'm always happy to help. Like this video, subscribe to this channel, and we'll see you guys next week.